Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 20th, 2025, and we're diving into the latest earnings report from Eagle Materials. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Eagle Materials has just released their fourth quarter and full fiscal year 2025 results, and there's a lot to unpack, from record revenues to strategic growth initiatives.
Revenue and profitability overview. Let's start with the top line. Eagle Materials reported a record revenue of $2.3 billion for fiscal year 2025. However, net earnings were down by 3%. John, can you explain this dynamic?
Absolutely. While the revenue hit a record high, net earnings saw a slight decline to $463.4 million. This was primarily due to increased costs and some operational challenges. However, the adjusted EPS for the year was $13.94, which is a 2% increase, indicating that the company managed to improve its profitability on a per-share basis despite the challenges.
And how did the fourth quarter fare?
The fourth quarter revenue was $470.2 million, a slight decrease of 1% from the previous year. The adjusted EPS for the quarter was 2.8 cents, which was below the forecasted 2.34, reflecting some of the operational headwinds they faced.
Strategic initiatives and growth. John, Eagle Materials has been quite active on the strategic front. Can you tell us about their recent initiatives?
Certainly. Eagle has made significant strides in expanding its operational footprint. They invested $175 million in acquiring two aggregates businesses in Kentucky and Pennsylvania. Additionally, they announced a $330 million investment to expand their gypsum wallboard plant in Oklahoma, which will increase capacity by 25%.
That's quite an investment. How do these moves position Eagle for the future?
These strategic investments are aimed at strengthening their market position and enhancing their ability to serve growing markets. The expansion in Houston and Wyoming, along with the new slag cement facility, are expected to drive long-term growth and operational efficiency.
Operational challenges and market conditions. Despite the strategic progress, Eagle faced some operational challenges. What were the key issues?
The fourth quarter was particularly challenging due to adverse weather conditions, which impacted their cement and concrete businesses. Additionally, they incurred higher production costs due to maintenance and weather-related interruptions.
How is Eagle navigating these challenges?
CEO Michael Haack mentioned that despite these hurdles, Eagle remains optimistic. They are focusing on maintaining financial strength and flexibility to navigate through market volatility and continue delivering shareholder value.
Capital allocation and financial health. Let's talk about capital allocation. How is Eagle managing its financial resources?
Eagle has been disciplined in its capital allocation, repurchasing $298 million worth of shares in fiscal 2025. They also returned $332 million to shareholders through buybacks and dividends. Their net leverage ratio stands at 1.5x, indicating a strong balance sheet.
What does this mean for investors?
For investors, this disciplined approach to capital allocation suggests that Eagle is well-positioned to continue rewarding shareholders while investing in growth opportunities.
Key takeaways. In summary, Eagle Materials has delivered a strong performance with record revenue and strategic investments that position it well for future growth. Despite some operational challenges, the company remains financially robust. John, any final thoughts?
Eagle's focus on strategic growth and disciplined capital management is commendable. They are well prepared to navigate future challenges and continue delivering value to shareholders.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Eagle Materials' performance in the comments below.